All right. Good afternoon, everybody. Bobby Payton here with Preactive Investments, and we're going to go over a couple things. Thank you guys for all chiming back after I've come back online. We're going to go over trade data, so I think that's important. With regards to China, I'm going to show you where you can find this information yourself as well. I think everybody should know by now that the SEC.gov is probably my favorite site for pulling information that I can trust and rely on, because there's criminal penalties if companies file reports with the SEC that are fraudulent. And this is one of the reasons why I like to go right to the source material, and I highly recommend you do the same thing whenever you're looking at any investment decisions that you make on your own within particular publicly traded companies. Once again, this is for educational purposes only. I do not have a view to purchase or to sell any of these companies. I just want to make that clear. It's more of a framework for you to think about a couple different companies, think about the trade data, and to make better investment decisions for yourself. If you need somebody who can help you with that process or manage money on your behalf, feel free to reach out at preactiveinvestments.com. But in general, this is educational purposes only. You're never going to hear me talk about a stock pick on here, for the simple fact that I'm a professional investment manager, and as such, I can't go and make recommendations without a tremendous amount of disclaimers. So when you hear people telling you to buy this and sell that and do this, they're probably not a licensed professional. So if somebody was just telling you to do a bunch of things with your tax returns that wasn't an accountant, you probably may want to think twice about that. And that's the same way I would refer to this financial advice when you hear it out there, when people are spouting it out, or legal advice for that matter. If somebody just started telling you exactly what to do legally, it may not be a good idea. You might get yourself in the clink. So with that, we're going to go over the trade data first. I'm going to share that screen, and then we're going to go from there to the earnings reports. So let's take a look here. I just shared the screen here. So going over this, let's see here. This number came out today, June 2021. The trade in goods and services. You can see that our deficit was 75.7 billion right here. So that number, hold on a second here, is 75.7 billion. So clearly, once again, we're going to have to assume that these reports are accurate. Only time will tell how accurate they were if there was ever some kind of outside audit. But this number is saying that the U.S. economy continues to buy more overseas than we ship out from what's produced here. And that's including goods as well as services. So if we click on this report, you can click on the full report. By the way, you can go to census.gov. So this information is in the census.gov. That's where we have our trade data as a nation listed. And so the full report is right here. Okay, so here we are, August 5th is when this went live. You can see that the census right here, you guys all know what I think about the census, but this is the most accurate information, partly because it's the only information out there. So some information is better than no information, even if you don't think they're being entirely truthful. And I'm not, like I said, I'm not entirely sure, with 100% certainty by any means, whether or not these numbers are being modified slightly within statistical ranges for political purposes. That's the way I would describe it. So the trade deficit rose by 6.7% year over year. Exports were essentially flat. Imports went up. And you can see right here, look at this. So a year ago, our trade deficit did collapse to about 45 billion. I don't know if you guys can see my mouse here, but right here on this chart to the right, it collapsed, and here it is back at about 80 billion. So we have almost $1 trillion flowing out of the United States every year more than we take in. And so, that has a huge impact on people's quality of life, as you can imagine, because, I've said this before, and, I'll touch on this in a second. Let me finish showing you this and remind me to talk about how many jobs are created per billion, because that's the best way to think about this problem. So the deficit, right here, June exports were 207 billion. Imports were 283. The increase in the goods deficit of 4 billion. So you can see that 93 billion of our trade deficit, 93 billion, was in the manufacturing sector, folks. That's where it was. Manufacturing, $93 billion in 1 month. That's how big our deficit was. Our services is 17.4 billion. Might be given, that might be all the legal fees and lawyer fees to figure out how to outsource out of the United States into other countries, for all we know. Or maybe it's some kind of, soft payments of sorts for finder's fees. Who knows? I'd love to be able to audit this number. And not that I'm going to do it, but I think that somebody needs to do it. I just don't know who that somebody is. And so you can see that we have over a $1 trillion based on this number alone, $1 trillion of goods coming in from overseas. Now, keep in mind that could be commodities, that could be oil, that includes oil, commodities, that could be finished products, automobiles, computer chips, you name it, drugs. So, but nonetheless, that should show you, and it should be a very concerning thing. If we want to be an independent nation, one would think that number should be lower. We should run balanced trade. I do believe as a nation, long term, we should attempt to run balanced trade over a 5 or 10 year cycle. So if 1 year, we have a trade deficit of 100 billion and the other year we're up 50 billion, I think that would be healthy. This idea of running a deficit structurally, I think it's a horrible thing, and it's all come to roost. I've been complaining about this for over a couple decades now, that it's not a good thing. It's not a sign of strength. It's a sign of weakness, and we've been weakened internally with these numbers. Okay, so let's go to, I want to show you the China numbers in particular, because I did pull that up. And when I was looking at the China numbers, okay, so you can go here and, we'll just go pull it up separately because it's a little faster. So if we just say China trade deficit, United States, and that's it. And if you do that, obviously there's a Fed one. I like the census one because it's nice and quick. So if you go to this one, the census, you could see the trade deficit with China was $28 billion, 27.8. So they're about a third of our trade deficit as a nation. And what's interesting is 12.1 billion of exports to China in June of this year. Now this number has gone up quite a bit from a year ago. A year ago it was 9.2 billion. So it went up almost $3 billion to 2.9 billion. And the trade deficit with a year ago is about flat. So we had 28 billion, 27.8. It's gone down a little bit. So I think part of these jumps, and once again, they do break it all out if you dig into all the reports, part of the jumps on the exports in the United States is probably crop prices, because we've had a really, really big move in crop prices this year. So it wouldn't surprise me if that's what is resulting in these increases in exports. Because look, a year ago, folks, 7, 8, 9, 10, so you're talking the first 6 months of the year, this was about 714, 7, so 35 plus another. It was about 50 billion. I think it was about $45 billion the first 6 months of the year. And then these first 6 months of the year, we're on a trajectory of over 60 billion, thereabouts. It's just shy of $60 billion of exports. Actually, 71 billion. I was looking at the 1 month. So $71 billion right here. So 71 billion versus 6 months ago, a year ago, this number. So 7, 14, 22, 31, 41, 41 plus 50. So 50. So 50 to 71 is a 40% jump. So if you think of it that way, we had a 40% jump in exports, which probably corresponds to what happened with the crop prices and so forth. So that's a tremendous amount of money, folks. The Chinese are spending, and now keep in mind, we're still buying too much from them, but it's costing them at least $20 billion more to feed their population, since for the most part, the only thing we seem to export to China is food. We don't really export too much more. I'm sure there's some services in here that we'd have to look at, but that's where we stand with regards to the exports to China. So that's a healthy number. It's a healthier number. This trade deficit is still 158 billion for the first 6 months. Well, keep in mind, last year was 310, but before that it was 344. Now you could see, as Trump was trying to get a lot of this stuff corrected, there was a massive move higher under the previous administration. If you go back to 2008, you can see the trade deficit with China was 258 billion. Then it shot up to 268, so another 10 billion. And then it went down a little bit during the financial crisis to 227, but then spiked right back to 273. Another 22 billion in 2011. Wow, look at that. Then it went from 295 up to 315, another $20 billion in 1 year. Then it stayed flat in 13, 14. Wow. Then it just shot up another $27 billion in 14. And then it went up again. These numbers just keep going, right? Another 22 billion. So they kept kind of ratcheting it up by about 20 billion a year here. And then Trump gets elected, 346. Before he probably started making all these changes, you could see the trajectory was still sky high. It went from 346, another 30 billion, 375. And then by 2018, that number jumped almost $50 billion in 1 year. 2018, it just skyrocketed. And then Trump started to hit the hammer, right, and go after China. You could see exports were 120 billion, and then they fell. China retaliated, but then look at this trade deficit number. It went from 344, it plummeted almost $100 billion in 1 year. This is when President Trump kind of punched China in the face, if you guys recall, in 2019, before China punched us back in the face in 20. So, you can see that the Chinese, I'm going to go to the video here for a second, then we'll go to the next company, and I'll talk to the video here. So here's the deal. With the Chinese system, and once again, this is based on there's a guy named I think it's Bass. I think his name is Bass, out of Texas, and he's done a lot of work on China. And one of the things that he has said, and I remember reading about this years ago, is that the Chinese, nobody wants their money. Nobody trusts the yuan, because they can just take it from you, right? They can just confiscate it. They can change the rules. They can make it illegal to trade in Chinese yuan. So 99% of what they buy as a nation needs to be purchased in other currencies. So it has to be purchased in, euros, US dollars, Japanese yen, because the world doesn't want yuan. It doesn't want that money. And so 99% of their trade is done in another currency. So as you can imagine, if China received almost $100 billion of less of US dollars, like US currency, then that $100 billion has a ripple effect on their economy, because then they when they go to purchase things around the world, um, they don't have the cash. They don't have the cash to buy it. Nobody wants their currency. So raw materials, oil markets, steel, iron ore from Australia, they run into problems, which is why I think the Chinese have gotten very desperate, and they've been trying to take over Australia and Canada. I mean, you don't believe me? Go talk to people that live in those two countries. I get contacted all the time from people in Canada and the United States asking me for help, of all people. Like, no offense, I can't help you. I'm just an American trying to help fight for America. But I hear you loud and clear that I agree that the United States should not abandon its friends. And, the Canadians and the Australians are America's long-term ally. It's always been an ally. So I do hope, and I am trying to get the message out, that we do fight. We do what we have to as a nation to fight for Canada as well as Australia. It's in our interest long term, not just because it's a good decision for the United States, but because it's a good decision as being free friends, right? We both want to be free, and we have to stick together, free nations. So it is a big issue, but I can't help but think, if China hit the gas and went after Canada and Australia harder, because we cut off their funding. We cut off their funding in 2019. And supposedly, what I've heard through the grapevine is that we've been in this not just sort of, this economic type of war and this other type of war with China since about, I think officially since about January of 2019 or something. So who knows? History will tell us what the reality was. I'm just saying that all these things are connected. So if you pay attention to the money flows, and it'll help make more sense as to what's taking place, and what we're up against, because we are truly up against an evil empire 2.0, and the CCP. They're a big problem, and to say the least. I actually did a post 2 years ago to the day, believe it or not, that came through my feed on Facebook. And what the post said was, Singapore, Hong Kong, I think it was Singapore, Hong Kong, and maybe it was Taiwan. Those three nations are 1/45th the size of China. Their per capita income was over 6 times China's. So I said that the average free person of Chinese descent that's living in Hong Kong, Singapore, and Taiwan was making 6 times as much money. And the way I look at that number is the corrupt, evil CCP is stealing the difference. So if the people in China are making 10,000 per year back 2 years ago, and people on average are making 60,000 plus in these other nations, the CCP is stealing $50,000 per person in China, mainland, every single year. That's the way I run the math. And these scumbags have been doing this for a very long time, and they've been bribing the world with the money that they've received. And, and I did sound the alarm about that at least 4 or 5 years now, that I was always very concerned that these trade deficits were being used for nefarious purposes. So nothing would make me happier than to either completely balance. Number one, we need to balance our trade outright with China, have it just go to zero. It's a push. But ideally, if we decouple from them permanently, as well as any nation, not just China, any nation that violates its citizens' rights, and I would even take it a step further, any nation that refuses to give their citizens the right to bear arms, I would even add that to the mix. You don't want to give your citizens a right to own guns to protect themselves from you, then you're probably not the best of people we should be doing business with anyways. I trust people with guns far more than people without guns that answer to bureaucrats every day of the week. So anyways, I think the whole world would be a much safer place if every nation had a right to bear arms. That's my personal belief. Okay, so let's go to Duke. We're going to go to Duke. Duke, I call it Duke Power. I know it's Duke Energy, but I remember when it used to be called Duke Power. So that's I think I forgot when they changed their name. Maybe they changed it 10, 20 years ago. But I just remember it as Duke Power from going into the business. So it's officially Duke Energy, though, folks. I guess it's I'm not sure what made them change it from Duke Power to Duke Energy, but okay. So they reported earnings today, second quarter. Uh, they had 96 cents a share in earnings and EPS of $1.15, and growth driven by success. Obviously utilities is are pretty defensive. So even during the downturn last year, in the economy, Duke still managed to make almost $4 a share. So they're on track this year to earn over $5, and they say it right here that their guidance is still 5 to 5.30. They think they can grow their earnings by 5 to 7%. It's paying, I think over a 3% dividend yield, and so one of the reasons why I'm doing electricity and water is because we can't live without either one. We can't live without electricity, and we can't live without water. And so, obviously, Duke is out of North Carolina, but they operate all over the country. They're in. They have almost 8 million customers, in scattered throughout Florida, South Carolina, Ohio, Kentucky, you name it. They're in quite a few states and so forth. And so I did think this was kind of interesting, this net zero carbon emissions. All these people are trying to be silly as far as I'm concerned. If they do that stuff, I hope they're not wasting too much of shareholders' money on it. You should just use good old-fashioned common sense and ingenuity, and the cost of energy should fall. So one of the things I wanted to say here is they're stating that their earnings is about 21% higher, 21 cents. So instead of 96 is what they reported, they're saying it's $1.15. So what I like to do when I see that is be like, what exactly are you saying is the extra 21 cents? So right here, what they're showing is a workplace and workforce realignment right there. So they added back, I guess what you can say, severance costs. So I guess it wasn't 21 cents, 19 cents, 18 cents. When you see the words workforce realignment, that's what it means. A workforce realignment means layoffs. It's the politically correct way to say it, folks. So I guess they cut the number of employees that they have. They have over 27,000 employees, I think. There we go. 27,500 employees. And so the workforce realignment, I'm not sure how many are getting realigned out. But this has been an extremely profitable company over time. They do their thing. They have a quasi monopoly by the government. And let me take a look at what else is interesting that I could share. Okay, so with regards to the revenue, you can see that for the quarter, let me see here. Why did this pop up? I don't know what this is. Okay, so for the quarter, they did $5.7 billion in revenue, up from 5.4. And regulated electricity, that went up by almost 300 million. Look at that. That's unbelievable. So $300 million in the regulated electricity, and non-regulated electric was pretty much flat. And you can see regulated natural gas. So their business is less than, it's about 5% or so, thereabouts, in regulated natural gas. So then you walk through and you can see the cost of their natural gas right here. So they charge $300. The cost of their gas is $80. Then they got to distribute it. Here's the fuel used and electric power generation, $1.4 billion. They brought in $5.2 billion. But then they have to pay for all the equipment. That's where your operation maintenance. This is like paying for all the employees and everything. but then their depreciation for all their stuff was $1.2 billion. So power plants have a pretty long useful life, but you got to make sure you get your money back if you're going to build these plants. So that's what that is. And then property and taxes, you can see they paid $350 million. This is on the quarter, folks. This isn't on the year. And, their profits are pretty healthy, 1.16 billion. And then interest expense was 572 million. So they finance a lot of their plant and equipment. That's what that is. And their net income, is, look at that. They didn't really pay a whole lot in taxes. They basically only paid $36 million in taxes. Wow. So you can see that by running things very lean and having was what they would say a healthy amount of debt, that debt where they can charge off the interest and plus the depreciation, even though they made $1.1 billion dollars before paying interest expense, they haven't paid a lot in taxes. Now, granted, some of that might be from last year. These tax loss carry forwards, they lost 1.2 billion in the year ago period. So it'd be interesting to see if this runs off, but we'd have to look at other filings to see how that looks. I do know that they increased their share count year over year by almost 35 million, so 34 million right there. 769 million shares up from 735. So that's what's going on. It has long-term debt of $57 billion. They have retained additional paid-in capital of $44 billion and retained earnings of $2.7. So they've been paying out a lot of their earnings. You got to remember, when you pay dividends, you take down your book value. That's an important thing to remember. And so the current assets of the company are $9 billion. Current liabilities are 16. So it has a negative working capital here. And so now, granted, there must be some paper that's coming due that they didn't work down just yet. So that's the deal right here. Current maturities of $5 billion. They probably didn't roll that debt yet. So it doesn't look as bad as it does. Their working capital is probably much stronger. They just haven't rolled it. So then if they don't roll the debt before the filing comes out, a company like this gets a pass. Smaller companies don't. You got to make sure that your numbers look good for investors, or you're going to run into some serious problems. So for the 6 months period ended June 30th, you can see their cash flow is very healthy, almost $4 billion, $3.87 billion. And but they invested in more capacity, so they needed to finance some of that. So that's why they raised $1.75 billion to fill in the difference for investments, because they also paid out those dividends, right? When you pay out the cash dividends, your cash goes down. So then you have to either finance it if you're going to continue to invest, or do something else. All right, so that's that one. So now let's go to Primo Water. So Primo Water, for those of you who might have gone to the grocery store, right? Primo Water is one of these companies where, if you guys remember Hickley and Schmidt, they would deliver these jugs of water, especially if you work downtown. I work downtown, so they would bring this filtered water to the office on trucks. They had those big blue gallons. Well, now this business plan was, you drive and go pick up the water, pick it up from the grocery store. It's not a bad idea. And they've been working on this for a number of years. It never really made a whole lot of money. This thing's been around for quite some time. And now all of a sudden they're starting to make a little bit of money. Nothing huge, maybe about 3-4 cents on every dollar of sales. And Primo, maybe they're finally starting to kick up their efficiency, but you can see their revenue increased 15% year over year. So, this thing did top out at almost, I think it had sales as high as $3 billion back in 2016 or something. So sales collapsed for a while, and now they're back on a $2 billion run rate. but they reported a net loss of 5 cents a share. You can see that right here. So they reported that they lost $8 million. But if you look at their EBITDA, right, interest earnings before interest, tax, depreciation, it was $100 million. So their EBITDA was up, even though their loss is they're reporting a loss. So you might be wondering, what the hell is going on? Why are they saying they're losing money but their cash is going up? Well, because they might be building out their capacity, and if they are investing. But what I would say to that argument, and I know that's what they're probably going to say, is you can only build so long. You've been building out your capacity for years, and your revenue still isn't there. And so, I'm a little conflicted as to whether or not this business model is gonna work as well as everybody thinks. Maybe it'll just kind of limp along, but they haven't been able to generate it just yet. Maybe they're just about to turn the corner. I guess only time will tell. But I can say right here, you can see where they're making their money. Okay, so right here, water exchange revenues are up 20%, but look at this year over year water refill. So filtration, it's down 8%. So this would be a little troubling, because they're building out all this stuff, but yet this is going down. I don't know why it's going down. I would have to look into it. Obviously, water dispensers. This is also an unhealthy sign, because if people aren't buying these water dispensers, maybe they're not buying the water, right? There's less growth in the future, and so that's the deal with that. And so let me take a look here. So right here, so North America grew by 8%. So then overseas, their business overseas grew. Wow. So the domestic business here, folks, the numbers are even worse. The number fell by 12% there on the versus, I think it was 8. Yeah, it's 12 versus 8%. And so internationally, I'm not sure where these guys are. I can't imagine they're too far. Maybe they're in Canada, but where they're setting up their water operations. But obviously, this is the rest of the world, ROW, rest of the world. But I don't know what countries they're in. So let's see. Pure Play Water, Europe and Israel. So it's not Canada. They're in Europe and Israel with the rest of it. But they have 22,000 locations, water refill units at 22,000 locations, and pre-filled reusable at 13,000 locations. So that's the deal, folks. Like I said, it's interesting. You can see that the share count went up by almost 11 million shares in 1 year. So either they needed more money to fund their operations, or they made an acquisition. That's what that means. So people are saying it's too rough for their brain. I'm not trying to be rough on this. I'm trying to kind of go through and explain how to read these financials. And once again, this isn't meant to be something that you pick up one time, right? It's part of it is taking the time to, maybe you'll remember something I said about the balance sheet on one company, and then something on the income statement on another, and so that maybe when you look at your own life and how you set up your income statement for your family or for yourself or your balance sheet, that some of these principles might apply. So even if you never use these concepts for your own, you don't go and make the investment decisions on your own, at least you have an idea as to how some of your money is being put to work. And the thinking and the logic from my perspective is, if you're going to take a lot of time to make money and put it to work in the markets or into investments, you should at least have some frameworks or understanding as to how somebody's doing it for you, so that you have something to gauge it with. So that's kind of the idea. So anyways, I hope that was helpful, and I guess I will see you guys tomorrow at 11:30. Have a wonderful rest of your afternoon, and God bless. Take care.